Good evening, all. Ira Epstein with your financial market wrap-up for this Tuesday, the 13th of April, 2021, and time 7 p.m. Central Time. Interesting day today, wasn't it? Wow. You saw the CPI numbers come out. You saw that we had the Johnson & Johnson go on a pause as one person per million they have found has caught something bad from it. In other words, brain clots. They're trying to figure out just what it is. But at the end of the day, one death, one critical case, 4 people ill, will not be able to stop the rollout of that vaccine. That's my opinion. They'll do everything they can to find out what they can do to avoid those things from happening, but the risk-reward ratio just isn't there. I'm not trying to be cold on this in any manner, but let's face it, how many people get vaccines for the regular flu and get bad reactions? I imagine some die. I'm not even certain. I'm not a doctor, but it just seems to me that the pattern is we knew something was going to happen, and it's unfortunate. It seems to be all women between the age of 18 and 48 that are being affected. In any case, the CPI number was interesting today, too. First, as you know, I'm sitting here, I'm going, what just happened in the market? I had put out my morning flash update, I swear to you, and within no time at all, I'm looking on the screen, the market was steady to higher, and all of a sudden it's down 100. Well, that's when I saw the breaking news about the Johnson & Johnson. It hit jets, the ETFs and other areas of the travel and leisure business. People thought, uh-oh, it's all coming back. I don't know about that. In other words, one vaccine, 6 people. You still got Moderna, Pfizer, AstraZeneca's of the same vein, as I understand it from everything I saw in the news today, of the Johnson & Johnson. In other words, there's different modes as to how these are developed, and it's more in that vein. And we know that there's been problems with AstraZeneca as well. Just might be part of what that is. But Pfizer said it can make up the difference, and by May, they'll be producing even more for the U.S. All right. The interesting part was today we saw, again, a fall in yields. That's interesting. Tomorrow, if you're an interest rate trader, you got to start watching Japan. They start determining how they're going to invest money over the next year now for their large insurance companies, which are the monsters in the business. And U.S. yields are just so attractive, I don't see how they avoid it. And that doesn't mean they put all their money in as their new fiscal year kicks off and all that. That's not what I'm saying. But there's really no other game in town for investments like that, and it just wins hand over hand. So I would assume there's still going to be money coming. I only mention that because last year was an outflow. Actually, they were selling instruments because they got down towards that 0.6 area, and it didn't make sense for them to be putting those out there. They needed a positive net return at home, and these current yields do give that. All right, so let's go to the markets. Another week, another all-time high so far on the weekly area chart of closes. You can't get away from that. When you take a look at the S&P, it's just been up, up, and away. Just think about it. You in 2009, it sounds so far ago, just said, I'm going to throw money into the market and forget about it, where you'd be. It's pretty amazing. As you look at the swing line indicator, it's still very much in the pattern, higher highs, higher lows. Now, nothing runs like this forever. So understand the word getting long in the tooth. That does not mean the trend is over. It means you've had a big run without a serious correction to it. When I come over and I look at the 18-day average, it's far away. So to get back to that, you'd have to have some form of a serious correction in the market. The 100 and the 200 are even further away. The resistance is the upper Bollinger Band, and you bent over to the right. Now, when you do that after hitting it day after day, the market generally doesn't just start going back up to it. It can start pausing on you. So a little bit of caution is warranted there, but not as much as you think. Because until the red line of the slow stochastic gets back under 79, this market still looks pretty darn good, and I think the pros are buying on the breaks in this market, still looking for that number. Now, there's also a window envelope. If you're a subscriber to my research, you know what I'm talking about. It's a standard deviation from this 18-day average. It runs exactly parallel to it, and you can get 3 of them total. I show them each day in my morning subscriber because it's that combination in the Bollinger Band that I think the trade is looking at right now as resistance points. What's joined the parade in wild bullishness out of left field, it just came roaring back, was the slow stochastic. It went sideways for a bit, held the key 100-day average. I think you'd agree. It did slip through it here, and you had a close under it, but that was pretty much it. Then the market fought its battle and took off. So there's a rotation back here. You see that in the market, and of course these are the FANG stocks. They're back popular. The Dow is starting to stall a little bit. I'm the first to notice that. I can see the red line trying to bend a little. We'll see if it does anything with that. We had an outside day down. A sign that you're not going to stall very much, in my opinion, would be taking out today's high. When you do that, markets often make a run to the closest moving average above it or a Bollinger Band. That would be the Bollinger Band. The trap would be getting over that and reversing back down, but you don't get that played too often. Tell me when you look at markets and you get back-to-back outside days. They're very, very rare. That's another example. Can happen, but I'm still bullish the market, but not as bullish as I was a while back. Do I still have clients that I've got telling to be long? I promise you I do. And that's in my written update, so it's just fact. June Russell, riding this. Now, what's happened here, which is so interesting to me, is the market, as you can see it going back and forth right here, this is the market that's been left behind. Whatever the reason, will it have a day in the sun like the NASDAQ? It could. We're going to get earnings. We're going to see what makes up these small caps. This is earnings season. That could do it. When you look at the VIX, you've been slipping to the downside with an embedded reading. You're not as down as you were before. I told you I think the pros wrote puts at 1738. I'm hearing that there's a lot of now people taking out some forms of longer-term protection in these markets as they're rallying back up again. We'll see on that. In the bonds, sideways action. I have been telling you this big break. Could be like the stock market. We've had this big rally. But this big break ended up with a consolidation phase. That's where you're at right now. You're overbought, approaching the upper Bollinger Band. 10-year note, consolidation phase, the same thing. Dollar index. I was very surprised that the market failed as much as it did. I could see the 200-day average offering the resistance between that and the 18, but today's break is eye-popping, and then of course you're even getting further follow-through tonight. Now, you're oversold as can be. That means you could culminate the breakdown here into the 91.55 area. Resistance on rallies back at the 200-day average. If you should take out today, that was Tuesday's high, up there, then back to 92.50, and it promptly signals that, okay, market got overdone. Is it at this point overdone? Well, it is oversold. Eurocurrency, flip-flop. I think it's even surprised how it came back from this 117 area so fast, and here you are pushing 120. I mean, that is quick action in this market, and it just shows you abroad how the Bollinger Bands are staying within them, but I don't think they're offering great support or resistance just yet. British pound, well, can the market clear here the 137.80 level to end a leg of a downtrend? You've got lower highs, but you're also starting to make the higher lows, and notice the number that you're holding. It's the 100-day average. We'll see. Any close over 137.80, I think, turns the trend of the market back to the upside, with the target possibly about 100 points higher than that, if it can get some legs to it. Bitcoin, well, you now have the sideways action. It's trying to push out to the top side. It is overbought, not embedded. We'll see if it can do anything there. Remember, Coinbase tomorrow, makes its debut at the IPO on the NASDAQ. They're pricing at about $250 a share. A lot of people are going to be watching this. But in face of that, just look at what this did. This market's gone up from 58,760. I don't want to give you the impression this was a few weeks ago. This was Friday. And look where the market's up to already. I mean, it's 64,600. That's a 10% gain almost in no time at all. Wow. Brent versus WTI crude, still staying with the differential favoring the Brent oil. And when we come to the different oils, you can see where you're at. The Saudis came out today and they think that demand will pick up enough to offset the increases in supply, and the market's going to find its legs here. The trend did turn up with this action over the past few days. You have higher lows, higher highs. Resistance 65.61, support 63.45. As long as you don't take out 62.41 in the June Brent, trend looks up to me. When you come to WTI crude, trend up here too. Higher lows, higher highs over the 18-day average. Market's got the momentum pointing up. To break the pattern, you'd have to take out 58.77. A theoretical resistance point, 62.27, the upper Bollinger Band. So when you put it all together, fairly interesting markets that we're getting here. And Bollinger Bands are, again, the name of the game. You got to be watching what they're doing. So if you want to see something different in Bollinger Bands, not what you read in the books, not what you've ever seen before, I'll carry you to that in my enhanced Bollinger Band course. Simply give yourself a minute, take a look at this. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time, and on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein, on the road to your education.